All right, hope you guys are staying safe out there as always. Welcome back to the channel. We're going to look at some price action today based on the Rev and Ribbons and the momentum oscillator. We'll look at a few strategies, and then we'll look at just some other statistics on trading the bands strategies. Let's jump right on in here. And also, before I start, greetings from Newport, California. I'm traveling. I don't have my usual setup, but I'm just enjoying the fall weather here in Newport. And okay, let's jump right on in. So I want to look at price action here based on a few things that we've seen in the past. We have seen our touch of this midline and even this major wick down here into the support 3 zone right there, and that was a major opportunity if you're doing a scalp. But I do see that price, the lower band is coming down here around that area again, which is, you can see our short-term target is 104 area. I would not be surprised if we saw a little bit of a bounce off of this support 1 band. And if I put the ribbons indicator on weighted average, we will see that we have a target a little bit higher here to about 112, which is just a little bit higher than we are. So that's not a major bounce, but I wouldn't be surprised if we saw a little bit of a bounce off of here and then possibly continuing lower. I do expect this dotted midline to hold support if we are going to remain in a little bit more of a bullish and consolidation posture. Now I want to look at a couple places in the past where price has touched off of this dotted midline and things that have followed. So you can see back here in August, it did do a nice bounce off of this dotted midline. It got up to support. Now we didn't even quite get up to support here, so I think this is a little bit of a weaker bounce, but we'll see. So what happened here when it bounced off of that? It had a nice about 3% bounce, and then it continued lower. It continued on a wick basis about 4.8% lower over the next 10 bars, and finally did see a major support area found. So if we were to go down another about 4% from where it tested here, this dotted midline, 4.8% would be just around that 104K area. So whether price continues to push the bands lower and we see a bounce off the 104 area, maybe we see, in the most bullish case, we see a bounce close to here around 108 to 110 where we're at. Or worst case, again, this is the worst case if we're going to remain in a more of a bullish period of the market, would be kind of what happened back here in February of this year. Let's look at what happened in February. So we got a test down. Now this is a little bit more bearish to me, not necessarily bearish because it's not the right word. It's more just downside bias with consolidation. We didn't see a bounce off of that dotted midline. We actually saw a test lower, but even off of that dotted midline, if I take this on a wick basis, it's about a 14% wick to the low here, and then later on, about 45 bars later, which is about 45 days later, we did see our low, and that was about a 16% to the low. So it wasn't a whole lot different than the actual wick there, but it was a 16% move to the downside, and that did again base off of this dotted midline as price consolidated and slowly pushed that dotted midline lower. So what would a 16% move to the downside be? Again, based off the first touch of the midline, this area-ish. So look at 16%, that's around 93K. So maybe worst case scenario, we'd go another 45 bars in the future, which would be November, somewhere in the mid-November, and we do see a touch off of the 94 to 92K area. That would be my worst case, but still bull market consolidation, and it's not even worst case. It's just more of a takes a lot longer to consolidate and find its low, and then the best case would be more or less bouncing from the 108 to 110K area here. Based on the momentum oscillator, again, we're just looking at the daily here. We do expect to see a bounce in the not too distant future. I'm basing that on a couple things. One would be we have only 2 bars left in our general duration. So duration, this is showing how long a downside cross generally tends to last. And I am basing this kind of off of extremes. So we saw our extreme here on the 11th of October, just a few days ago. We are making some new lows, so if we are going to continue down a couple more days from here, maybe we do get that 104K area. Again, this is kind of our maybe mid to best case. We see our touch off of that, and then our daily time frame turns around. But we do see in the past, sometimes it takes a bit longer. Like even over here, we had our second bounce, and we did get a nice move to the upside. This was where we got our move, about 4 or 5% to the upside, but it did continue down from there. And again, not every time is going to be the same, but it kind of does rhyme. And we do have our statistics here for our general moves for those who are interested, but it is super helpful if you do not have this Ribbons suite indicator. Man, it's so helpful for general long-term analysis. I'm going to look at a couple other time frames. We'll look at our 10-day time frame here real fast and see where we're at. We are at a cross to the downside here, but this does not have super long to go. We did see a bounce off of the momentum, or the the support 1 here. A nice wick off of that. Actually, almost a perfect wick off of that 105 area before it pulled back here. This does say a little bit downside bias, but not a whole lot lower. And again, if we're going to kind of stay in our a little bit more bullish posturing, we would think that 98K in this sense on the 10-day, a wick, not even a closure kind of to stay above the support band, but maybe a wick down into the 98K level there. But yeah, on our momentum oscillator, we do see that only general, again, we're looking at averages here, 1 bar left, which that would take us out into the 18th of, the 18th to the 28th of October here. So we do think, or according to this indicator, we do expect a bounce sooner than later if we're going to remain in a little bit stronger posturing. So that, again, is just momentum oscillator here, and the ribbons from the ribbons suite. Check those out if you do not have them. The link is in the description below for that. Now let's look at a couple strategies, and we'll kind of go from here. This is a long strategy based off of the 12-hour bands. You can see that we are nearing another cross to the upside on the 12-hour bands. The last one was a nice, let's look at this, a nice 9% gain here from cross up to the upside. And again, this is super simple, just based off the momentum oscillator here on the 12-hour time frame. Literally nothing else. Across to the upside for entry, cross to the downside for exit, and we do have a pretty nice equity curve up and to the right. This can be optimized, a whole lot to really get the best out of the momentum oscillator indicator. But since that cross to the downside, we did see a about 12% move. And now we're sitting at an 8% move, and it does look like the oscillator should cross to the upside here in the near future, as we are on, the 0 bar to the average. Again, this is just average bars of how long a downside cross works, and we are seeing that our general oscillator level is about the 25 read, which is a little bit above this separation. We are about 4.5 points over the average separation, which means the separation is extended, and you can expect a pull to the upside on momentum. And again, bars here lasting. This is at the longest expected duration. Again, if we're thinking an average duration, there are plenty of durations that last longer than this, but those are more bearish durations. And so again, we're looking at the averages right now. So yeah, we do expect price based on the 12-hour to bounce pretty soon here, and that would mean a possible cross to the upside, and this strategy will take a long when that happens. Let's look at a short strategy real fast. So this is I just posted this in the Discord. This does have a lower hit rate, but for a short strategy is generally really nice and profitable on a high time frame, so that's not bad at all. It does take a while to slowly grind to the upside, but does have a 1.7 profit, almost 1.8 profit factor, and has seen some nice gains. Again, for a short strategy on a bullish asset like Bitcoin, those are some pretty good stats. That is a short strategy available in the Discord for anyone who has the ribbon suite. Now let's look at a few bands strategies, and then we'll wrap up the video with some other statistics. So this is a 30-minute strategy here. Our peak profit and loss here was at 116% in June, so it has seen a long period of sideways. We were again at about 116%. Now we're at 108, so that's only 8% down, technically off of the highs. But that is, if you're trading at leverage, 8%. If you're trading at 2 or 3x leverage, that is a substantial move to the downside since then. And if price action picks up here in the near future, we will hopefully see the strategy continue up and to the right. So this is a 30-minute strategy. We'll look at a 1-hour strategy. This one is in a trade currently, not currently at a win, but this strategy, again, has had a nice slow and steady grind to the upside. It did have this was a 407 to 396, so a 10% move to the downside, and then since then the strategy has been slowly grinding its way up and to the right. This strategy is in the Discord as well for those members who have the AI Max. And let's look at the 4-hour strategy here. I'm currently trading this one as well. It is in a trade that is more or less flat, maybe a little bit in the red, but we have seen this month be a small bit profitable, but profitable nonetheless. You can see that equity curve is going up and to the right. It has seen a few losses, but missed the big dump to the downside here back earlier in October, so that's nice to see that. This is from HT Crypto in the Discord. He ran some tests, so he's been trading the 30-minute strategy and the 1-hour strategy, and he did some tests looking at fees and came to realize that fees are over a year period. So this is all over a year period. Fees are a massive part of a trading strategy. So you can see here you have your gross trading profit and loss on the 1-hour trading strategy. So that would be over a year's time at plus 27K. I think this is trading a 100K trading account, so that's a nice 27% gain on the strategy if you're just looking at gross P&L. However, the trading fees and the funding fees are here. The funding fees is not a major indicator necessarily. It looks like it's down, maybe 1K, but the trading fees took about a negative, looks like a -7, or even more. Let's see, look at here. The net P&L is 16, so about 10K of profits was eaten up by the trading fees. Now I'm not sure what his trading fees were. Now, again, this is profitable, 16%, but 16% over a year is probably not as profitable as you would hope it would be. Now, again, if you're trading this on a inverse perpetual account, so maybe you're holding Bitcoin as the underlying collateral, and then you're trading this above and beyond, then you get the upside of the gains of Bitcoin over the last year plus a 16% gain, which to be fair is nothing to laugh at, but it is it is a major, I would say, indicator of fees, and it is important to be aware of your trading fees. Yeah, so the 1-hour is entering on limit orders. The 30-minute strategies is entering on market orders. So let me look at this. So this is the 30-minute strategy over the last year, and this is actually the net profit is in a loss, which is not what you want to see. The trading fees are just massive there, and again, this is on market orders. It is down almost 20K. 20%. Just the fees take about 20% of the gains away. And we have seen that, as I looked at the strategy earlier, the last 3 to 5 months of the strategy has not been super profitable. It's going sideways. The strategy at its best was up almost 20K, and then since then has been down and then really flat here recently. So the 30-minute strategy, again, this is using market orders and the trading fees. Not as profitable, not profitable at all actually over the last year, and so it's real important to get good trading fees, and also to if you're trading something as low as a 30-minute strategy in a more rocky period of the market, it is going to definitely eat away at your profit. So something to be aware of. Just want to always be really transparent on the channel, and if you are if your strategy you've been trading is not as profitable as you've wanted it to be, might be really something to look at as far as fees go. Maybe consider trading something like an hour strategy, which fees will affect a little bit less, or even higher strategies from there. I think I have the daily and another 1-hour strategy pulled up here. just to look at the, the daily. So this is a daily on ETH. Before we go, this is again posted in the Discord. This has a lot more room to run. You can see the profit factor is a profit factor of 3, which means trading fees are going to be a lot less of a part of this trading strategy. And on the 1 day, the profit factor is 1.7. Maybe taking out the max stop loss here. We'll take a quick look at it. If you want your trading factor or your profit factor to go up, yeah, you can get it to go up, but you will have to endure some more swings in the market. So again, this is just general statistics. I want to be very transparent here and kind of provide users a little bit of food for thought. If you're trading strategies that have a low profit factor, you might want to optimize those a bit more for trading fees if your fees are high, and just get a general realistic view of the market and how to be profitable in the market. Okay, I'm going to leave this video off there. Hope you guys enjoy it, and again, stay safe. I will see you in the next one.